Very good morning, friends. At the outset, let me invite each and every one of you for this fast track webinar series, BIndAS. This is exclusively for ICAI certificate course on Indian Accounting Standard. Friends, this weekend on 7th of May 2023, ICAI will be conducting an online assessment test, and those who are eligible, they can actually appear for this examination. And I'm sure you would have already paid the fees of 1,000 plus, and you have taken the mock examination also yesterday. This week is only to prepare you to gear you up for that examination. Number one. Number two, there are others who wish to actually join this Indian Accounting Standard certificate course and wish to clear the course. This session is also for them, and also for those who wish to understand what Indian Accounting Standards is all about. And most importantly, anybody who wish to brush up their knowledge in Indian Accounting Standards, especially I've already cleared my certificate course, I've already done some course, and I wish to keep myself abreast with the developments. Good. This session will be 5 days, and each day I'll try to cover minimum of one or maximum of two standards, and especially the entire discussion will be around the exam oriented questions. Practically also I will discuss, and I wish to share before you that the pattern of examination will be like this. There will be 100 marks question paper, which will be online, which will have 75 questions, 50 into 1 mark question and 25 into 2 mark question. One good thing about the certificate courses, there is no negative marking. I repeat, there is no negative marking, and the minimum pass mark is 60%. I repeat, minimum pass mark is 60%. Good. I am sure some of the links are already there to you. You would have already enabled it. My best wishes to you. Good. Let me now directly go into the subject today. Okay. Now, let me first start with 24. Today, May 1st, let me start with Indian Accounting Standard 24 on related party disclosures. So I'll parallelly will have the standards also here. I also wish to share with you that we have participants across length and breadth of the country, right from Ahmedabad and Anantapur, Bangalore, Belagavi, and we have from Chennai, Cochin, Coimbatore, and Eluru, Ghaziabad, Guntur, and Jaipur, and Kannur, Karaikudi, Kozhikode, Malappuram, Mumbai, Mysore, and Delhi, Nizamabad, Pune, and Secunderabad, even Tenkasi, Tanuku, Trichy, Vijayawada. So till Visakhapatnam, we have friends in all these places, and also we have friends from abroad also. So many have also got connected from Singapore and also from United Arab Emirates. So these are all the friends who are online. Now, before I venture into this particular subject, I want to make one analogy. This IndAS 24 is connected with our Ashok Chakra. Ashok Chakra also has 24 spokes. And in a day, we have 24 hours. And 100% purity means we say 24 carat. Okay. So 24 relates to related party, and quite an interesting number. And I want to make one observation before I venture into this. IndAS 24 is a disclosure standard. I repeat, it is a disclosure standard. It has nothing to do with accounting. It has nothing to do. So how you will, I want to make one observation that the entire Indian accounting standard is business is always first. Disclosure is must and accounting is next. Accounting always takes a second step, and none of the Indian accounting standard will guide you or what you have to debit, what you have to credit, how you have to pass a journal entry and all. Never, never. It will only give the principles. It will only give you the principles, and all of us are chartered accountants. We know what the accounting rules are. So we need to only tune up our understanding with respect to the principles part of it. Good. So let me directly take you to the term called related party transaction. Straight away, related party transaction. I want to make one observation, guys. Please look at this part, especially look at this. This is your Indian Accounting Standard 24. You have a definition. This definition is para number 9. This definition, actually, out of this entire 27 paras, IndAS 24 has only 27 paras. And out of that, the definition alone, the para number 9, if you complete definition, IndAS 24 is over. That's all. Nothing else more than that. And remember, guys, you have 75 questions. I repeat, you have 75 questions. And there are 39 standards. I repeat, there are 39 standards. So definitely, each standard, there will be minimum of 2 questions. Minimum of 2 questions. Some of the standards, they may focus only one question. Like, for example, we have a standard like you are hyperinflationary. If your economy is hyperinflation, which standard is applicable? There may be one question. So if that is the case, you will have another bounty. So another standard, they may ask even 3 questions. So please focus your attention. I will be giving you the tips with respect to examinations also. So let me first directly take you to the related party transaction. So once you understand this, so you have actually 8 definitions. Out of that 8 definitions, related party, this definition alone is the biggest one. Please look at this. It starts from here. It goes till the next page. So one entire page is definition. One single definition. Nowhere in the entire Indian accounting standard you will see one sub definition. Of course, para will go beyond one page, but the definition paragraph. But one definition in that paragraph, will it go beyond one page? It is only in IndAS 24. Okay. So gold, I will say this is gold, 24 karat gold. This one paragraph, related party definition, is such a gold, guys. Okay. And what is a related party transaction? Now, please understand one thing. This entire standard speaks about 2 things. What is it? It will speak about relationships, transactions, and you should also give the summary of the transaction. So relationship also you should disclose, transaction also you should disclose, and summary of the transaction you should disclose. Look at this. Look at this word circumstances. This is where case study will come. So I'll discuss some of the case studies also, and I'll be doing an exclusive case study session. And please look at this, and I'll be announcing that either today or tomorrow for this 25 questions into 2 marks each. Okay. So there will be 2 sessions in addition to these 5 sessions on May 5th, evening 7 to 9, and on May 6th, morning 8 o'clock to 10 o'clock. So these are the 2 sessions which will be 2 hours plus 2 hours, 4 hours. Exclusively, I will be doing questions on case studies, where I will be covering of course, that means 50 questions. So I will be trying to cover at least 80 questions covering the entire standard 2 times. So once you get the grip on those case studies, this IndAS certificate course can be thrashed like anything. Okay, good. So now let me take you to this question. Oh, a related party transaction, where is it? So where is the transaction definition? It is a transfer of resources. Okay, it can be for like a transfer of stock from one entity to another entity. So transfer of services. Okay, like for example, the definition of you have the employee benefits, key managerial personnel, one managing director, one director will be serving the other company. Obligations between a reporting entity and a related party. So related party is defined above, related party transaction is given here. Regardless of whether a price is charged, this is most important word. Regardless of whether a price is charged. What do you mean by that? Now, please understand one thing, guys. Related party transaction is not a prohibited transaction. It is never a prohibited transaction. And please look at this paragraph. This fifth paragraph, I want everybody's attention. Related party relationships are normal feature. If I am doing a business, who will come to me first to help? It's only my family members. It's only my father, mother, brother, sister, uncle, aunt, onnu vitta chittappa, onnu vitta periyappa. So all these guys only, they will first come and I'll explore them. After exploring them only, I'll go to friends. After exploring friends, only I'll go to investors. Okay, so please understand this concept. So it is never a sin. Related party transaction is not a sin. But what is a sin? Not disclosing it is a sin. Not disclosing. Yes, my business has been supported by related party transactions. Okay. Now, whether there is a price charged to it or not, okay, the disclosure has to be given. So, they speak about disclosure. So, come to this question, guys. So, what is a related party transaction? So, between a related reporting entity and a related party, provided the price charge is less than fair value. Fair value is 100, price charge is 80. So, that is related party transaction? No. Whether price charge is at cost? No. Price charge is more than cost? Whether price is charged or not, whatever the price is next. Okay, fair value and all next. But you have to disclose. That is a related party. Identification of the transaction first, measurement of the transaction next, disclosure. See, there is in entire Indian accounting standard, IMRD will come. Identification, measurement, recognition, disclosure. In IndAS 24, this is a disclosure standard. Identification, measurement, no recognition, only disclosure. Identification, measurement, disclosure. That's it. Okay. So therefore, it is 1A. Come to the next one. IndAS 24, related party disclosure standard shall be applied where? Now, just now we saw. It will be applied where? Related party relationships. So you need to first identify the relationships, then transactions. Okay. Now, transaction, for example, I have a subsidiary. Subsidiary, is it a related party? Please look at this terminology. Look at this. An entity and the reporting entity are members of the same group, which means parent subsidiary, fellow subsidiary. Fellow subsidiary means two subsidiaries. So A, B and C are subsidiary of A. So B and C are brothers, or B and C are sisters. So it's called fellow subsidiary. That means same parent. Okay. So entity and reporting entity are members of the same group. Okay, good. So now, related party relationships, transactions, outstanding balances, closing balance, including commitments, meaning guarantees given, okay, between an entity and a related party. Circumstance, I'll give you an example. One case study I will do. One case study. For example, during the year 22-23, okay, 1st April 22, no relationship between two companies. And in May 1st, there is 100% holding of one company. And between April and May also there were transaction between two companies, but holding was not there. May only holding was there. And in February, they sold the entire shares. But there were transactions before holding. There were transactions during holding. And after selling, after holding also, that means after dilution of the holding also, there were transactions. So that means holding period were from May to February. There is no holding, no relationship on April month, no relationship in the month of March. There is no closing balance also. Identify the circumstance in which disclosure has to be made. Now, whether 31st March 2023, whether disclosure is required, because during the year I acquired and I sold, but that was when nothing is there. So please understand, this is a very, very interesting case study. These kind of questions will be asked in examination. Okay, good. Now what is the answer for this question? The answer for this question is you need to disclose whether all the transaction or only the transaction during the period. So please understand the definition here. A related party transaction is the transfer of resources between a related party. Now, when will be a related party? Only when the holding is there. So April month transaction and March month transaction is not a related party transaction at all. That need not be disclosed. So only when is a related party, the transaction has to be disclosed. Even doesn't matter whether on 31st March there is no relationship. So very interesting terminology. So you need to discuss, you need to actually interpret, connect with the practical part of it. Of course, I have taken one annual report here. Okay, so I will take you to page number 161. Please look at page number 161 here. This is Ashok Leyland's Limited related party disclosure. List of related party. Okay, other related party. Then you have what do you call it as related party transaction summary. Summary only there. 1, 2, 3, 4, 5. There will be a number of entries. So only summary. Okay. Then significant related party transactions. Okay. So that has to be mentioned. Then it actually goes. So many items goes. That's all. So item number 3.8. Okay. Sorry. Where am I? So 3.8 up to this, including disclosure as per 186.4. Okay. Then details of loan, excluding interest. All these I will be discussing one by one. Okay. So now please look at this. IndAS 24 related party disclosure shall be applied except. So I will apply for related party relationship, transaction, outstanding balances, circumstances, and also the disclosures to be made about those items. So what? It is given actually. So where it is given, please look here. So what are all the disclosures you have to give? This is given here. So what are the disclosures you should give? And especially, please look at this. If an entity had a related party transaction, you must give minimum disclosure, amount, outstanding balances, doubtful debts with respect to the outstanding balances, expenses recognized on that, amount incurred by the entity with respect to the KMP, disclosures required made separately for parent, joint control, significant influence, subsidiary, associate, KMP, other related parties. Now, following are the examples of transactions. It's only examples. Okay, now please look at this Ashok Leyland. Now, where is the Ashok Leyland? This is Ashok. Now, these are all the examples of transaction. What is that? Please look at this. Purchase of raw material, sale and service of sales and services. That is what is given here. Purchase, sales, all these are already there. So that they are giving for subsidiary, fellow subsidiary, associate, joint venture, holding company, entities where control exists, entity where significant influence exists, KMP total. So all these have to be given, the disclosures to be made. That's a separate paragraph. Okay, good. Now, shall be applied except all four are there, except the fee 5. What is this? Now here, I want to bring to your attention para number 4A and 4B. Look at where 4A and 4B. Related party disclosure as laid down in the standard do not apply. Oh my God, doesn't apply. Where? In circumstances where such a disclosure would conflict with the reporting entity's duties of confidentiality. If there is a confidentiality arrangement, circumstances where providing such a disclosure would conflict with the reporting entity's duties of confidentiality, but can it be confidential between two private parties? No. As specifically required in terms of a statute, as specifically required in terms of a regulator, as specifically required in terms of a competent authority, Enforcement Directorate, Statute, Income Tax Act, and GST, regulator. So, Securities and Exchange Board of India. Remember, confidentiality only with respect to, specifically. You cannot say, no, between my holding company and subsidiary, we have an agreement, we will be confidential, we will not disclose. That cannot be done. Okay. So please understand this paragraph and be practical. So where providing such disclosures would conflict with the reporting entity's duties of confidentiality as specifically required in terms of a statute. So that is what will not be disclosed. Okay, good. Now come to who's a related party. Okay, who's a related party? Look at this definition 9.1. Okay, related party, you have a generic definition and specific list. This is with respect to individual. B is with respect to an entity. Never in Indian accounting standard they'll use a term called company. They'll only use a word called entity. An entity includes corporate, partnership firm, LLP, society, okay, non-profit organization, Section 8 company, everything. Okay. So this is individual. So related party with respect to individual. Related party with respect to entity. Okay. Now, who is a related party? A related party is a person or entity. Look at this. So, A is with respect to person, individual. B is with respect to entity. A is person, they have given 3 items. And entity, they are given 8 items. 1, 2, 3, 4, 6, 7, 8. So, with respect to individual, 3. With respect to entity, 8. So, now come here. A related party is who is it? That is related to an entity that is preparing. Is a person or an entity or both. If you tick both wrong, it is either either person or an entity. Look at this definition. Very, very important. R. That R is very important. Okay. So 3D. Good. Now come to the next question. Now look at this next definition. A. Now a person or a close member of that person's family. Okay, now who's a close member of that person's family is also being defined. Look at this. Close member of the person's family is defined separately. Okay, good. So a person or a close member of the person's family is related to the reporting entity if that person has, okay, now please look at the 3 words. These 3 words are very important words. He has control, joint control, significant influence, and is the member of the KMP of the reporting entity or of a parent of the reporting entity. Now, who is the KMP? Now, key managerial person is again defined. Look at this. So, having authority, responsibility for planning, directing, controlling, whether executive or otherwise of an entity. Now, I'll give you a practical question. Independent director, including any director. Now, whether independent director is a KMP, yes. Now, there is a transaction between independent director. Now, whether that has to be disclosed. So, including any director. So, the word is independent director is included. Whether executive or otherwise. Please look at otherwise. That means independent director is included. Okay. So, please appreciate these parts. So, now these things will come in case study. So, I'm giving the definition here itself. When I go to case study, all these things will come there. So, control means, actually, if you go to Companies Act, the word control refers to above 50%. Okay, above 50%. But under Indian accounting standard, even with 30% or 20%, if you can have a control, provided substantially operating part of it, power is there. All those, that definition is quite a different distinction. 110. We'll go to IndAS 110 for that. Significant influence, again, as per Companies Act, it is 20% and above. Control means above 20, above 50. Significant influence means between 20 and 50. So that is why your associate company and joint venture will come under significant influence. Actually, joint venture companies are not defined. But in the Companies Act, associate company will say associate include joint venture. Joint control means decision cannot be taken individually. One will have 50, another will have 50. But every decision has to be taken by 75%. How 75% is possible? So therefore, if that person has control, joint control, significant influence, all of the above. So D, all of the above. Good. Now come to the next one. Who's a close member of the family of the person? Close member. This is a close member. So close member of the family of the person are those family members who may influence. Who are they? that person's children, my son, that person's spouse, my wife, that person's domestic partner. This is the influence of IFRS, because this particular word, whether to be included or not, was a $1 million question. Even Institute of Accounts of India was debating on this. So my brother, my sister, my father, my mother, my children, my spouse, my domestic partner. Oh my God. Now what is that? Please look at this. In India, domestic partner. A domestic partner is a relationship between couples who live together. Now this is not a definition given anywhere, but there is a Prevention of Domestic Violence Act 2005. In that, this concept of live-in relationship has been debated in many courts, and Supreme Court has come to this conclusion. Between two consulting adults is not considered illegal, and the couple present themselves to the society as husband and wife and live together for significant period, the relationship is considered to be relationship in the nature of marriage and the Prevention of Domestic Violence Act. That is with respect to. So, marriage is not required, but for the purpose of Prevention of Domestic Violence Act. Now, this is the generic definition. Yeah? Nowhere law you have a definition for this. Domestic partnership where couples who live together share a common life but not married. Okay, so now this is close members of a family or those family members who may be expected to influence. Who are they? That person's children, spouse, domestic partner, my brother, sister, father, mother. Okay, and children of that person's spouse or domestic partner. Is very interesting. The children of that person, my spouse child is my child only. Sometimes there can be second marriage. So I will marry a woman who is already married and got a child with that particular marriage. So that is why children of that person's spouse, children of that domestic partner, they are also related party, close members of the family, dependent of that person or dependent of that person's spouse, dependent of that person's domestic partner. Two things are not defined in India. Dependent is not defined, domestic partner is not defined. Okay, so we need to take a generic General Classes Act definition. Okay, so therefore, and who is not a close member? Children, domestic partner. Children are brother and sister. Brother and sister is close family member. Children are brother and sister. Okay, now please look at this. Children of that person's spouse or domestic partner is included. See, normally, they must say children of that spouse or domestic partner, brother, sister, father, mother. Father, mother, children is me only. Okay. My father, mother, children will be my brothers and sisters. So brothers and sisters are already covered. But brothers and sisters, the children are not covered, for your information. Okay. That means niece and nephew. Technically, they are close members of the family only. But this is how the India is there, for your kind information. Okay. Please don't ask me all these questions. How that can be possible? But this is what the answer is. Who is not a related party? Very important. Very important, guys. Very important. Please look at this para number 11. In this kind of following are not related party, you will feel that they are related party, especially two joint venturers simply because they share joint control. Joint control 50-50. Now they have invested in one company 50%, 50%. Now A and B, can you say they are joint? They are actually related party? No, they are not. Just because they invested, you cannot say they are related party. In this kind of following are not related party. Very interesting. Two joint ventures sharing joint control. And look at customer. Customer, supplier, franchisor, distributor with whom an entity transacts significant volume. 60% business one guy is giving to me. So he's a related party? No, he's not a related party. Just because by virtue of economic dependence. Okay, no. Then look at this. We have this departments or agencies of government. So you actually you have to pay taxes to them. Does that mean they're related party to you? No, but domestic partners are related party. Okay, 6D. Good. Now come to next question. Relationship between parent and subsidiary. Okay, should it be disclosed? Okay, should it be disclosed? Now, slowly I will take you to this paragraph. Quite interesting. Actually, each and every paragraph I have case study to discuss, but time is a constraint, so I'm just giving you the summary of it. Now, please look at paragraph. Relationship between parent and its subsidiary shall be disclosed. Shall means, shall means mandatory, irrespective whether there has been a transaction. Now, if you look at the first para number 2, first give the relationships and the transaction. Now, transaction is not there, we will not show relationships. Wrong. Now, look at this Ashok Leyland. Where is Ashok Leyland? This is Ashok Leyland. Now, this is your related party disclosure. Now, look at this. My associates, Ashok Leyland Defense System, my joint venture, entities where control exists, entities where control, significant influence exists, key managerial personnel. Okay. Gopal Madhavan, he is a CFO of, he's a chartered accountant and CFO of Ashok Leyland. Now, so these are all your related party, and it goes above also. Now, please come to this. List of related party. Holding company. Okay. So, please look at who is my Ashok Leyland's holding company. Ashok Leyland's holding company is Hinduja, and Mason's holding is the holding for the holding company of Hinduja Automotive, and Mason Development is the holding company of Mason Holdings, and Amas Holding is holding company of Mason Development. So, it is tier 1, tier 2. So, it goes. So, above Ashok Leyland, you have Hinduja Automotive. Above Hinduja Automotive, you have Mason Holding. Above Mason Holding, you have Mason Development. Above Mason Development, you have Amas Holding. See how much tier on top of it. So, you have to tell all those things. They are all your related party. Subsidiaries. How many subsidiaries? So, below Ashok Leyland. Above Ashok Leyland. Okay. And fellow subsidiaries. So, who are my fellow subsidiaries? Means they are all my brothers and sisters. That means we have a common parent. We have a common parent. So, all these I have to mention. So, relationship between a parent and a subsidiary shall not be disclosed. Wrong. Shall be disclosed only when transactions are material. Okay, now please read this paragraph 11, 13. Look at para 13. Relationship between parent and child shall be disclosed irrespective of whether there has been a transaction between them. An entity shall disclose the name of its parent, and if different, the ultimate controlling party. That is why I showed what is the ultimate. So my parent, my parent's parent, my parent's parent, my parent, it goes on. Okay, my grandparent, my great grandparent, everything has been disclosed. Okay, so the ultimate controlling party, everything has to be given. Good. So shall be disclosed only when there has been transaction. That is also wrong. Shall be disclosed irrespective of whether there has been a transaction or not. Okay, good. So that is your answer for 7. Now we have the other questions also, but let me take you one more question and then close it. Government, because this particular standard has a very interesting para with respect to government. Please understand, government will invest in a company. Okay, and that government company will invest in another government company. Especially, I will show you IOC balance sheet and the NTPC balance sheet and NLC balance sheet, Naval Lignite Corporation. So all these balance sheet I have. So where government would have been an investor. Now, should the holding has to be disclosed. So government, they have an exception. Please look at the paragraph 25. A reporting entity is exempt from the disclosure requirements of para 18 in relation to the related party transfer outstanding balances with a government that has control or joint control and another entity that is a related party because the same government has control. So, please understand, same government. That is very important. This and is very important. And is very important. So, government of Tamil Nadu, government of Karnataka, they have control over 2 entities. Now, whether the relationship between these 2 entities has to be disclosed in A and B, okay, they have an exemption. Okay, so this exemption will be mentioned in their respective Indian accounting standard paragraphs. Okay, so I have a very limited time, so I'll just define this question. I'll go to the next standard. Okay, government refers to except. Oh, what is it? Is it what is it so special about government? Yes, please understand. Please understand. Government means will it be central government, state government? Government refers to government, and government under General Classes Act and also in the Goods and Service Taxes Act. If you go there, it will say government means in central CGST it will say the central government. In state GST it will say state government. government agencies. So many government agencies are there, for your information. So many. So look at this. These are all some of the government agencies. These are all various government agencies of India. So many government agencies. Look at this. Every ministry will have a government agency. Like for example, you can take Ministry of Agriculture. So National Dairy Development Board. You can take Ministry of Civil Aviation, Airport Authority of India. They are all government agencies. You can take National Institute of Design that comes under the Ministry of Commerce and Industry. So these are all the various agencies. So they are also government. Government agencies are also government. And similar body, whether local, national or international. Local means state. National means Ondriya. And in Tamil Nadu, they use a word called Ondriya. So I have my own reservations for it. So local, national or international. Okay. So state, central or international. So everything is government here. Now, which is not a government? So government includes government agencies, government companies. Whether government companies is a government, wrong. Government companies is not government. Okay. So please understand, as per this definition, government company is not government. But government related entity is an entity that is controlled, jointly controlled, influenced by a government. So government company is a government related entity, but not government. Okay. So please understand the difference. Government company is a government related entity. Okay. So 10C. Good. So now let me take you to, I have few case studies also to discuss, but we have a paucity of time. So I will now take you to IndAS 21. Okay, 21. So this is another very, very important standard. 57 paragraphs. Guys, you have 57 paragraphs. The effects of changes in forex rates. Okay. The same Ashok Leyland balance sheet I will show you with respect to forex rates. Now, understand what this standard is all about. Understand what the standard is all about. Then things will be very clear for you. Now, please appreciate. In India, 21 is the legal age for marriage. Of course, for men it is 21, women it is 18. And in India, 56% of women marry between 18 and 21. The remainder 44% they either marry above 21 or some of them they don't marry also. Okay. Now, of course, another interesting fact is there. In Goa and all, the legal drinking age is 18 years. Okay. Sikkim, Puducherry, Karnataka, Himachal Pradesh, Goa, it is 18 years. But in Punjab, the legal drinking age is 25 years. Okay. Punjab, Haryana, Chandigarh, okay, Meghalaya, Delhi, Maharashtra, these are all 25 years. Okay. And there are 13 states where legal drinking age is 21 years. Tamil Nadu is also one among that. And your Kerala also one among that. Okay. But now that is some interesting facts about 21. And you have the dice. If you add all the 1, 2, 3, 4, 5, 6, it will come to 21. Okay. 21 is such a very interesting number. So now let me directly take you to the scope part of it. Now, what is the standard is all about? What is the standard? Look at the scope. Once this is clear to you, I think the direction will be clear for me to actually take you to what it is. This standard shall be applied. Okay. Now, please understand, cross-border transactions are there. If you are an Indian company, you have Indian suppliers, you have Indian customers, you have Indian investors. Okay, you don't do any transaction abroad. So then, whether IndAS 21 will be there, not required. There is no requirement for IndAS 21 at all. But you have a cross-border transaction. You have an Indian, you have investor who invests from abroad. You have an external commercial borrowing. You have to repay that borrowing. You have borrowed, you have purchased a machinery which you have to pay in installments again from abroad. You have purchased from Australia, you purchased from Africa, you have to make the payment. So purchase, sales, investment, borrowings abroad. So in accounting for transactions and balances in foreign currencies. Okay. Now they give an exception. Why the word exception? Because For example, you buy there is a 3-month contract. You import certain raw material from Sudan. From Sudan, you import some raw material. Now, 3 months later, you have to make the payment in foreign exchange. So, you enter into a forward contract. So, payable is in Sudan currency, but the forward contract is a separate contract. It is a financial instrument. So forward contract is a hedging document to actually hedge your forex risk. So now that forward contract, how will you actually recognize? How will you actually record in your books of accounts? That actually been mentioned in 109, IndAS 109. So please be careful about these two transactions. Now, Sudan you have imported, you have to make the payment. Now, if both are in same year, how to do it? You buy in 1 year, you settle it in another year, you have 31st March in between. Then translating the results, translation and financial positions, okay, of foreign operation that are included in the financial state. Now, what is the next part? Okay, so this next part is translating the results and financial position of foreign operations. So you have invested in Singapore in one company, 25% you invested there, 75% you invested. 25% means only significant influence. 75% means you have a control. Okay, that means they are a subsidiary. Now, how will you do that? Translating the results. So whether those results, how you will merge with your P&L account. Okay, and financial positions of foreign operations. You have invested 25 crores, so much. Now, whether that will be, so that is called net investment in foreign operation, NIFO. Okay, so that NIFO, how you will account it? So, translating the entity's results and financial position into a presentation currency. Okay, now you are a subsidiary to a company in Australia. Australian company has 100% invested in Indian company. Now, translating an entity's result financial into presentation currency. Now, whether you will present the financial statement in INR or in Australian dollar, because anyhow you have to convert in Australian dollar, then only consultation happen with the Australian company. So that presentation currency is a question mark. Okay. So we will understand all these concepts in a very simple terms. Okay. Please look at this. Okay. Let me first start with your definition. This definition is para number 8, which has so many sub-definitions. What is closing rate? What is exchange difference? What is exchange rate? Fair value, foreign currency. What is foreign operation? Okay, foreign operation, net investment in foreign operation, NIFO. First, what is foreign operation? There is a subsidiary, there is an associate, there is a joint operation, there is a joint venture, or branch, or the activities of which are based or conducted in a country or currency other than those reporting entity. So we have an investment outside India, which is a subsidiary, which is an associate, 30% control, joint arrangement. So they will invest 50, you will invest 50, or they will invest 40, you will invest 60. But decision can be taken by 75. Either they cannot decide, you cannot decide, because you have only 60, they have 40. That is called joint arrangement. So foreign operation, how that will be reflected in your financial statement. Functional currency. Now remember, there are 3 currencies. Now NIFO, net investment in foreign operation. Okay, so that is FO, this is NIFO. The amount of reporting entity, interest in net assets. So how that will be measured? Okay, so that also we will discuss. And part of it you sell. How you will, whether that will be routed through P&L or it will not be routed through P&L. Okay, it will be routed only through your comprehensive income. So how it will be done? So wait, one by one, I'll discuss each one of that step by step. Okay, but now please understand there are 3 currencies. So one is your presentation currency, number 2 functional currency, and number 3 foreign currency. Okay, so understand these 3. So once you understand this, I will say 10 to 15% of the standard is clear. As per IndAS 21, which currency is the primary economic environment in which the entity operates? Primary economic environment, PEE. Okay, now foreign currency is a currency other than functional currency. So out of these 3 currency, foreign, functional, and presentation currency, functional currency is the first one. So your holding company is Australia, but subsidiary is in India. Holding company in Australia, subsidiary is in India. Now, Indian books of accounts, will you, just because you are an Indian company, will you follow INR? Just because sometimes what will happen, in India you will have a company, but you will not do operations in India. You will only buy from US, sell to US, borrow from US, repay to US, but company will be in India. So then what is the purpose of recording the transaction in INR? Every time that the currency USD has to be converted to INR and recorded. So functional currency is the currency primary economic activity. This primary means, does they give any percentage? 30%, 40%, 80% above you do, then it is primary. You have a definition for it. What is called primary. Para number 9 says primary economic environment. They give some criteria. You satisfy this, then that is called primary. So they never, in Indian accounting standard, guys, never the percentage and all has been given. So they only will give only one thing. Business. Business first. Business is first. Always business will be the way in which the definition would have been written. So business will be the motive first. No, I am a chartered accountant. I sign the balance sheet. I do this, I do that. So then accounting should be the first in Indian accounting standard. No. In Indian accounting standard, accounting is not first. Business is first. Accounting is next. Disclosure is must. So your presentation, your recognition, they will first give priority to your business. Your business has to be captured. You cannot do accounting in your way. What is business? That only has to be captured in books of accounts. So that is why priority will be given to business. Okay. So which is a primary economic? Functional. 2B. Okay. 2B. Now, as per IndAS 21, which is the currency which is presented? It is called presentation currency. Which is presentation? Actually, you may record your, for example, your Australian company has invested in India. You do business in India, you buy in India, sell in India, you make profit in India. But for Australian company, how they will merge with, how they will consolidate. You give a INR balance sheet to them, they can how the INR and P&L and balance sheet in INR you give, how they will consolidate. So presentation. So your presentation currency is the currency in which the financial statements are presented. So functional currency is the currency in a primary economic environment in which the entity operates. So functional currency, then presentation. So your recording will be in INR, but the balance sheet, P&L, you will prepare in INR, but present it in Australian dollar. So that means you will have two balance sheets. One INR balance sheet, one Australian dollar balance sheet. One INR P&L, one Australian dollar P&L. So both will be there. Okay, because you have to consolidate and he is the owner of your company. Okay, so therefore it is called presentation currency. So 3C. Now look at one. IndAS 21 shall be applied except. Now we already discussed that. This is what we discussed. Shall be applied in accounting for transactions and balances in foreign currency. Okay, and then translating the results of the financial positions of foreign operations, and in translating the entity's results, my INR results, into Australian dollar. Okay, hedge accounting to foreign currency items, including the hedging of a NIFO. Remember, this hedging of a NIFO, actually NIFO is discussed in your standard here. Okay, so what is your net investment in foreign operation? But the hedging part of it. Okay, so the hedge accounting, this standard does not apply to hedge accounting for foreign currency item, including the hedging of a net investment in foreign operations. Okay, now what is hedging, what is hedge accounting has to be discussed separately. There will be a case study also on that. Okay, so don't worry. So I'll be doing these things in my 5th evening session and 6th morning class. Okay, so including the hedging of a NIFO. So this is not applicable because para 5. Okay, para 5. So 1D. Okay, please understand. Because that is taken care in 109. It is taken care in 109. Okay, good. So now let me take you to next question. As per IndAS 21, foreign currency transaction shall be recorded on initial recognition. Very, very important paragraph. Okay. So now what I will do, I'll take you to para 21. This is how you will recognize your initial transaction. Look at this. Initial recognition. Now, let me take a example. An example is your purchase. There is a purchases from Germany. Okay. So it is in euro. Okay. Let us say it is in euros. So you have purchased and there is a 4 months payment. Okay. There is a 4-month payment. So today's date is 1st of May 2023. Today's date is 1st of May 2023. And you have got an invoice. You have got an invoice. Invoice has come. Or you have cleared the goods. Goods has reached here. Okay. So a foreign currency transaction shall be recorded. Now there is a purchase transaction. There's a 1 lakh euro. 1 lakh euro. So that is the total cost. Okay. Round amount. Now, will you record that because your functional currency is INR? Will you record 1 lakh euro in euro itself? No, you have to record in INR. So then this 1 lakh euro you will multiply with what? An initial recognition in the functional currency, INR. Okay, 1 lakh euro by applying the foreign currency amount, the spot exchange rate between. So spot exchange rate is today's rate because this is transaction date. How will you decide the transaction date? Invoice date or the date of the goods what you have received? These things it doesn't discuss about it. You have to go by your local laws. So what is your transaction date? So generally the invoice date will be different. What the goods when it crosses the customs frontier, because that is where your customs law, your other laws will say. So that is where you own the ownership. Okay. So until then you don't get the hold on that. So that is with respect to the transaction date. So a foreign currency transaction shall be. So some of the questions you will not have an answer in IndAS. You may ask which date will I go by the invoice date? For the time being, we'll discuss invoice date as a transaction. Okay. So foreign currency transaction shall be recorded on the spot rate. Okay. So spot exchange, not year end closing, year beginning. So your initial recognition will be at spot rate 5B. Now I want to make one more observation here. Now today's let us say 90 rupees is 1 euro. So 1 lakh in euro into 90 is 90 lakhs. So 90 lakhs will be purchases, debit, and credit my creditors 90 lakhs in INR. Now I'll go to the next one. Okay. Now this is the monetary item. So what I will do, I'll take you to 23A at the end of the each reporting period. So now my reporting period is let us say 4 months is there. So June, May, June, next month is June. So let us presume that my year end is not 31st March, my year end is 30th June. I'm going to pay only in July, August only I'm going to pay. But 30th June I have to close. Now will it be 90 lakhs? No. At the end of each reporting period, foreign currency monetary item shall be translated using closing rate. Now what is monetary item, non-monetary item? Now receivable. Now this is also been defined. Look at the definition. Again, monetary item. What is monetary item? Those are held, units of currency held. So money items. Receivable is money. And assets and liabilities to be paid in a fixed and determined manner. So all current assets are monetary items. All current liabilities are monetary items. Okay, in simple terms. Okay. So what is non-monetary? You buy a fixed asset. So your loan liability will be monetary. But your, for example, you buy, you don't take the stock. But you take a machinery. So then what will happen? Machinery will be 90 lakhs. Machinery liability will be 90 lakhs. Now, which is monetary here? Machinery liability only is monetary. Machinery is not monetary. So please understand this. So will I convert machinery in terms of closing rate? No. Okay. So please come to para number 23A at the end of the reporting period. Now here it is only stock. Okay. Purchases is only in the form of stock. So purchase it has gone to P&L account and only the closing stock is there in my closing or something would have been sold. Now my monetary item is payable. So foreign currency monetary item shall be translated using closing rate. Now 1st of May it is 90 rupees. Now 30th June it is 92 rupees. 2 rupees it has gone up. So then my liability will go by 2 lakhs. So 90 lakhs it will become 92 lakhs. So my credit liability 2 lakhs. Now where it will be debited? So reporting at the end. So at each end foreign currency shall be translated using closing rate. Okay. Now, recognition exchange difference. Okay. Coming to this next one. So here, as per this foreign currency money shall be translated using spot exchange rate, no. Average rate, no. Beginning, opening, closing rate. Okay. So 6A. Now, I will now take you to the next question. Now, what will you do with respect to the exchange difference? The exchange difference arising on settlement of monetary items or on translating, both. Settlement means you are making the payment. Okay. On 30th June, it is only not settled, it is only translated. The 2 lakhs, what you will do? You have to recognize, okay, in P&L account. Okay, except for para 32. What is 32? I'll go that separately. So that means credit 2 lakhs and debit P&L account. Similarly, you are making the payment. 90 lakhs become 92 lakhs. So you pay 92. So that debit, you have to increase your liability from 90 to 92, debit P&L account, then make the payment 92. So whether you are settling also debit to P&L, whether it is translating also debit to P&L. Okay, so that is with respect to exchange difference. Good. So now I'll take you to the NIFO. Now, what is this NIFO? It's a very, very interesting terminology. I'll just discuss this particular part alone and what you will do with the net investment in foreign operations. How you will recognize. For example, you have, this is actually one case study, how you will recognize with respect to NIFO. So I will take you to one interesting paragraph. So let me take you to paragraph 15, 32 and 33, and this is 32 and 33. Now, exchange difference arising on monetary item that forms part of a reporting entity's NIFO, okay, shall be recognized in P&L of the reporting entity or the individual financial statements of the foreign operation. In the financial statement that include foreign operation and the reporting entity, such exchange difference shall be recognized initially in other comprehensive income and reclassified to equity or profit or loss on disposal of NIFO, on disposal of net investment in accordance with para 48. Now, this you need to understand in a very close terms, simple terms. So now what is foreign investment? I am in India. I have a 80% holding in one subsidiary company or 100% holding in a Singapore company. So I've invested 70 lakh INR. Okay, that is converted to Singapore dollar in a Singapore company. So that is my foreign investments. Okay, that is my foreign. So my investment in foreign operations. Now that investment will go up and down. That investment will go up and down. Now what to do with that? Okay, so let me now take you to para number 15. Look at para 15. Net investment in foreign operations. An entity may have a monetary item that is receivable or payable to a foreign operation. Now, what is meant by this? So, you have invested money in a Singapore company. So, you show it as an investment. So, investment is actually a receivable only. That money is to be received. An entity may have a monetary item. Now, may have a monetary item that is receivable or payable. Now, there are two things here. One, what is the monetary item? You would have given a loan to a foreign operation, that is receivable. You would have done a transaction, that is receivable. Now, is it not a normal business transaction or a transaction? No. So, foreign operation means you have a subsidiary, you have a, because that has already been defined. Any subsidiary, associate or joint arrangement is only called as a foreign operation. So now with the foreign operation, you may have an investment, you may also have a monetary item. So because you would have given money to them or they would have given money to you. So entity may have a monetary item. An entity, an item for which settlement is neither planned or likely to occur in the foreseeable future in substance and is accounted for in accordance to 32 and 33. Such monetary items may include long-term receivable or loan. They do not include trade receivables or trade payables. So, such monetary items may include long-term receivables or loan. Please understand the business part of it, then this paragraph will be clear. Only one part I will discuss. Only one part, 32 and 33. These two paragraphs alone I will discuss and then I'll do one simple case study. Okay. So, this is gains or loss arising from translating translating the financial statement of a foreign operations recognized in other comprehensive income. This one question, if I discuss, I'm sure you will be clear. Okay. So let me first take you to para 44 now. Look at this 44. What is this? Translation of a foreign operation. Okay. Now, apply the results and financial position of a foreign operations are translated into a presentation currency so that the foreign operation can be included in the financial statements of a reporting entity by consolidation or equity method. Now, what is this? Okay. Now, what is consolidation? Now, please come to this particular paragraph once again, especially para number 32. Exchange difference on monetary items, and only one paragraph I will explain, then things will be clear. In the financial statement that include foreign operations, okay, such exchange difference shall be recognized initially in other comprehensive income and reclassified from equity to profit only on disposal. Simple. I invested 70 lakhs. Now, whenever the Singapore company goes up, the valuation, I mean, the profit goes up, 70 to 90 lakhs, 20 lakhs you will only recognize in comprehensive income. Now, so far we have only seen P&L. Now, when it will go to P&L? It will go to P&L only when the 70 lakhs you sell to, say, 100 lakhs or you sell to 120 lakhs. At that point of time, the difference between your carrying amount and the sale price, that will actually be transferred to your equity. It will be reclassified from equity to P&L on disposal. And even which is already been credited in your what do you call it as comprehensive income, that also will be reclassified from equity to P&L. So for example, 70 become 90. So that will be carried in comprehensive income. Now 90 you sell for 100. So that means 10 will go to P&L. 20 also will go to P&L because 70 has been sold for 100. That's all. So guys, thank you very much. Thank you very much, friends. I will now invite few of the participants to share your thoughts. Any one of you can raise your hands before I request Mr. Sampath Kumarji to share his closing remarks. Yes, please. Yeah, we have Mr. Sunil Kumar. Yes, Mr. Sunil Kumar, I'll just allowing you to talk. Sunil Kumar, yes, please go ahead.
Thank you, sir. You made me aware today the foreign exchange operations and the translation, and particularly the days where I learned is all the P&L items should go to average rate like that. But today the machinery, when we bought the machinery account is a non-monetary and the liability is a monetary. So that kind of explanation made me aware it is need not required to remember this particular standard is what I understood. It is excellent. It made me aware how to read this particular standard. Thanks a lot, sir.
Very good, Sunil Kumar. Prabha, yes. Good morning, Prabha. So with Prabha, we'll go to Mr. Sampath Kumar to share your thoughts. Yes, good morning, Prabha. You wish to share something? Yes, I think she is not able to connect. Over to Mr. Ganesh Natarajan. Good morning, Mr. Ganesh Natarajan. Good morning. Okay. Oh, we have Anil Agarwal. Good morning, Anil Agarwal. Anil Kumar. Anil Kumar. Oh, yes, good morning.
GK ji, I am audible? Hello?
Absolutely. Please go ahead.
Sir, am I audible now? I am Ganesh Natarajan here.
Yes, Mr. Ganesh, please go ahead.
Yeah, good morning. Sorry, sir. I didn't turn on my mic at the first place, so I was not audible. Good morning, sir. I met you in registered value course when I did it in ICMA Institute. So you were, so nicely moving, and I felt you were really down to earth, and this initiative is absolutely stunning. Like nobody will do it for free. So to be frank with you, the lucid explanation, we need not be a chartered accountant and we don't need to have any technical knowledge on the subject to understand what you are presenting. So I am really feel that I'm really blessed to be a part of this presentation. Thanks a lot for your great help indeed, sir. Thank you so much.
Now, Mr. Anil,
Yeah, Mr. GK, it was a really, I'll say it's a wonderful and kind initiative from your side, because imparting knowledge is a really great task and really learned a lot. Even I'm not appearing for the test, but the things which today I got some fine points like 24 chakras, and then you have shown that 21 years of age to remember these IndAS. And above all, when there is a or term is there, then there is the option of either is the correct answer. It's not the and one is there. Then yes, there is a domestic partner case. For an auditor, defining that and disclosing that is quite difficult. I think this auditor has to mention that I cannot, a disclaimer has to be there because domestic partner cannot be disclosed, because it's quite a vague term that has been used in
There
this.
is a social stigma. There is a social stigma that is connected to it. So
Uh,
apart from that, once people, the question is whether such people are there who can influence the business. Because
Yeah.
in this political scenario, these kind of transactions matter a lot.
Definitely, but finding out that relationship is quite difficult. So, anyway, but Rajuji is a tremendous job, and I really felt that gaining knowledge from you is a very kind thing and a very good initiative. I really thank you for that.
Thank you. Thank you.
Good morning, sir. Yeah,
very
this,
good morning.
so very good morning, sir. Thanks for this particular knowledge session and your the 24, especially the related party. It is to make, shall I put in a fun phrase? It is like a Bhagavad Gita. Every time you read, you will find a new definition and new understanding of that particular standard. So this, especially on the domestic partner thing, actually it is missed in my eyes also, to be frank. And now the way you have explained it by referring to the general class, etc., is very nice. And only one doubt, sir, actually I have, which is I couldn't get it from any of the experts, is the when I'm reporting the transactions with a related party, do I need to include the GST, which is actually I'm recovering from that particular party, and exclude the TDS, which I'm going to not pay to that related party at the time of showing the outstanding balances or the transactions value?
That you can disclose it separately, whether it is included or excluded.
Okay.
There is no such prescription under the law. I mean, under the NDAs.
And sir, thank you so much, sir. Thank you.
Yeah,
So much,
good morning, sir.
Good
I'm
morning.
Prabha. Yeah, it is excellent, sir. It's an excellent session. It is in my age also. I'm able to understand, and though I don't have that much practical, I'm a practicing chartered accountant. Though I don't have this much in real practice, but it is making me understand the nuances, and I'm able to apply in my regular clients. And really, it is extremely a good one, sir. Thank you so much. Even you can charge for this, sir. It is a free session, means we are all chartered accountants earning, so you can charge for this. It's extremely a good initiative, sir. Thank you so much.
So thank you very much, friends. Over to Sampatji for your closing remarks, sir.
Dr. Raju and my dear friends, as the testimony given by so many persons voluntarily to share and pour out so much about their experiences of today's class, Raju has taken through two standards, the 24 and 21, highlighted about what is a functional currency, foreign currency, presentation currency, what is first, what is next. I think he always reiterates business first, next only the other thing of following the disclosure or whatever the reporting. So thank you very much, Dr. Raju. Madam highlighted about the charging. The charge, what Dr. Raju wants today from each one of you is not money. Is not money. He wants a word of appreciation in his 3S Pro blog spot about your reflections in one word, if time permits, a sentence. That is the only gratitude for his passionate knowledge sharing in simple way. The tough concepts are being uncoded by Dr. Raju for our benefit. Thank you, Dr. Raju, and my dear friends.
Thank you, sir. And friends, see you tomorrow, same time, 8:30.